Man, I hate trading in chop, but sometimes when you jump into the right place, you can get a really nice day trade going for several hundred points. Hello everyone, welcome to Scholar Trading's weekly chart review. Before I dive in, I'd just like to ask you to subscribe and hit the notification for when new videos come out. Hopefully that over the last year these have proven useful for you and that it has dramatically changed your trading outlook for the positive. Share it with your friends, like the videos if you truly like the videos, and in the comments post down any questions that you may have. I'll do my best to address them in the videos to come. So let's dive into NASDAQ first, and then I'll jump into some specific stocks just to show you exactly what I see in the technical analysis. So, kind of made the call here in this box long time ago, right? Like even before it hit down here, I was kind of expecting it to go there. Just to reiterate, it blew past my box that first day, but it actually closed within it. And then a few days, it closed within it again. And a few days, I would say, you guys can give that to me, right? It closed within it, right? Let's just go with it. All right. So what I see here is exactly kind of what I was expecting, right? We had one of two scenarios that were to happen. The first one is it's going to hit this area and just kind of go sideways for a little bit, or it's going to hit and start dropping off like it did in number 4 here, where it just kind of hit and then drastically dropped off to the new lows. Okay, so right now we're not dropping as hard and fast as I expected, so it's going to be a little bit of a sideways show for just a little bit. Right now, what we have going on, and I'll zoom in on the 4-hour time frame. All right, we closed off the day with two parallel candles to the bullish side, and still rejecting off that zone here, right? So we made the lows from the climb, that 50% of this imbalance candle on the 1 hour just kind of tapped and started going back up. But from that area, we have not made new highs. So this just shows this is kind of an area of liquidity, right? If I take that bar and these are our highs, right? So where the candles closed, you can see that it tested it a few times and it's just starting to go a little bit lower, where these were the parallel candles dropping off and this came close and started going down. Okay, so I'll just drop those off. So currently what I'm seeing on the 4-hour is, we had our EMA shift, it's starting to drop. But again, we haven't made, in the short term, we haven't made any new lows just yet. Like this wick is still in play. Once we break through that, then I can safely say we're going to be dropping down. Going back to the daily, I want to show you guys this right here. So I'll expand my MACD and RSA just to kind of give you an example as to what is going on down here. Two very good indicators I like to keep on my charts because it, especially on the long term, it gives me a very good understanding as to what is to come. Okay, so I just want to show you this white line here represents kind of the peak where I see a price line shift. So when that green crosses the white and then turns red, that's the price shift from, what are my settings here? My inputs. The fast and the slow length, right? So the 12 and 26 EMA markers, so to speak, right? That's kind of the price action with these lines. So when the 12 crosses the 26, so the green crossing the white and turning red, or red crossing the white turning green, that is a sign of a significant shift in the market itself, and what it signifies is a long-term price shift. Okay, midterm, I guess, midterm price shift, like within about 3 to 5 month change. That's kind of where it all starts dropping off. From what I've seen, that as soon as they cross over, it's about 2 months of a trend in that particular new direction before things kind of cool off and either stagnate or reverse. So let's kind of go over this right now. So we saw the shift right here. Okay, look where it happened before, slightly above, before we started dropping way up here. Okay, so you got the price shift about 3 days after the peak. Here you saw the peak happen on February 2nd, and then we get the price shift on the 13th. So I mean, it's been nearly 2 weeks before that price shift, where this one happened a few days later. So bit of a different situation that we have going on here. However, judging by the MACD and the RSI, we're going to scroll to the left now that we have that line, and we'll see where things were at in the past before they started dropping off. Okay, so you can see here where the price line hit this area, and I'll just drop that a little bit. You can see where the price line hit that area, and then we had the shift in price change. Even though that this was going sideways, the MACD and the RSI were dropping, right? Then we had a little bit of a shift upwards here, and finally on the way down. Okay, so that right here from this peak to where it actually shifted the first time, it was only a drop of about 4%. Where was it? Yeah, about 3.84%. Okay, then it still continued because that was a minor rally before the final move down. So in that next blip, right, it was still a continuation from the first one. So we can even add from this line right here, from this final red dot, I'll just draw it all the way across, all the way to about there where it started to kind of go back up. Okay, so that lasted about 70 days, right? That big drop all the way going to the original one, but then it dropped a little lower before it rallied, right? So the final one was way down here. But you can see how low this got before it had any sort of semblance of pulling back. Okay, so that lasted 70 days. Okay, and the market dropped approximately 14%. All right, now when we got over here, you could see once we hit this low, it kind of stagnated, went sideways, even though we can see the candles dropping, this price line's going up. So that signifies divergence, which means that at any point, if we don't make new lows, so you can see the candle wicked off here and then actually closed in the same area, but the price lines were higher after it closed lower the second time. So that would signify that we want to move up. So therefore, from where that dot is, it would have been right here starting at that candle. So the next time that it shifted, it climbed 12%. 10%, I guess, where the shift is. Okay, then from 2 to 3, right? You see where it kind of peaked right there. Look at this. So it peaked, and where the price line shifted would have been right here, where I have that candle. So I mean, we had about 4% drop before that actually had the shift, and then until the next green one, dropped another 17%. Right? So these moves, what I'm saying is they're very, very large and significant. Okay, before we have final price action. Now look at this one, where we had the 4 going down to the 5. Okay, so price shift happened here, going down, but you see it kind of plopped up quickly here for a little bit of a rally, but it didn't really last long because we had a very strong engulfing candle the next day off to its new low, right? All the way down here where it kind of raised the first time, but the ultimate low was down there before it started finally to climb. Okay, and that was another 16.5% drop. All right, so just to show you that this is a pretty significant move every single time that these flips happen. So again, right here, you see this switch on January 6th? It happened right here on this candle. Up it went until we finally had a shift right there. It went up 11.7%. Okay, so now, based on that, let's take a look at some stocks. What pattern are they following? So Tesla is a great example, right? This one, I just do 2 black lines to show where the price action has been before a very high and long move, right? So this, even down on the RSI, I showed that it was insanely overbought. Like it was 93 on the RSI, where typically overbought status is at 70. So that was insanity. Okay, it went all the way up here. It dropped down to the center, but that was a sharp pullback, and it just kind of hovered there for a little bit. Okay, meanwhile, the price line on the MACD just kept dropping. All right, so how big was that move that it signified? The drop happened right here at the end of that candle. So it's really hard to gauge because, I mean, it flipped and it only went down about 12, 13%, okay, before it started climbing back up again. However, based off of that, right, where you have the next peaks that aren't as high as the first one's convergence, it means that it wants to keep going in that direction. But now let me show you what happened every single time that it came past this black line. Okay, so that was an anomaly. It kind of really peaked up at earnings right here. People got excited and jumped in very quickly, and then it started to tank. Okay, so we went from there to there. We lost about 12%. Doesn't seem that big. Next time it crossed this area, watch this. Okay, it crossed this area right here on this candle. All right, and the next time that it flipped upwards was in this area. Right, so just where that price switched, that went down 26.8%. Okay, then it had its little bit of a rally, as you know, obviously from peak to valley, it was much more. It was about 44% drop. Okay, and then from this low right here, where it crossed that black zone and started climbing. So where are we at? We are here from that candle all the way to this one, right, to that low, 18.5% that it climbed. Of course that it climbed more, right? But when we're talking strictly from the price shift, like we can go from the absolute low to that absolute high, and I mean, it climbed 50%. Very good. Now look at this one. As soon as it climbed all the way up there, you could see the action right here on the price line. It started to drop while this was almost going sideways, right? Like you could see it hit the same zone 3 times before finally dropping off. And this is where the drop happened. Okay, so it started right there. We had some significant divergence because they popped back up to the same spot, but this was significantly lower. Okay, so here are highs, right where that drop happened. From here all the way to that first bottom, as you can see, that was a 27% drop. But it never really popped back up to the middle. It kept going. It dropped all the way down here, which was 61% in the span of 151 days. Okay, that is very significant. So now what happened in the last few weeks? Here's the price shift right there, and it's climbed all the way up to here. So it increased 80%. Look what's about to happen, guys. I'll zoom it in. You see this? The green is just about to cross the white. If we have one red trading day from Tesla, that's going to shift. Okay? And then I can expect a very gradual drop until the RSI kind of rebalances itself and the MACD shows average price line movement. So that is Tesla in a nutshell. That's why when it matches up with the NASDAQ, where it shows that the price line shifted here, you see Tesla isn't too far behind. How does NVIDIA look? Price line shift. Look where it peaked. Right? And originally projected. That's always nice to see. Apple. Price line shift. Right? Look at the zone that it's in. Look at the significant drop. Right here. That slow bleed all the way down, dropping 22%. Look where we're at now. Let's jump in another one. Amazon. That shift already happened. Earnings were bad. It hasn't been able to recover. BlackRock. Shifted a while ago. Although doesn't follow NASDAQ, so that's kind of irrelevant. Let's see. Disney doesn't really follow NASDAQ either, but as you can see, price line shift. Look where it was the last time it was this high. Right? Look what happened again. Price shift, down it's going. Especially on the daily. Right? DocuSign, where are we looking here? Not a whole lot of price action, so let's move on. EA Sports, or sorry, EA Electronic Arts. Just used to EA Sports. But look, right here is a very good sign for reversal. We've hit a bottom. Look at the last time we hit the bottom here. Okay, we've hit bottom and then climbed 15%. No, not fantastic, but it still kind of shows you the last time it was kind of in the oversold territory. Very good opportunity to be able to grab and maybe climb 15 to 20% before it stabilizes. Okay, let's see another one. GME, GameStop. Not a whole lot of interest right there. Where can we find another good example? JP Morgan. A little bit of stagnation here, so you can see it going sideways while the candles have been going up. That shows a little bit of a divergence, so it potentially that it will be dropping shortly. Meta. Price shift. Right there. Right, when was the last time it was in that zone? Right here, pretty close. What happened? Drop off, steep drop off to kind of level out again before it climbed. Right, it hasn't really been in this zone. This is as high as it's been for quite some time. So, kind of goes to show that this will be dropping off very, very soon. Microsoft, price shift. Right there, where it peaked. Look, the last time it happened here. The last time the price shifted right before the peak and before it reversed, 20% drop. Possible 24 if you caught it right on the open on October 13th. Look what's happening now. Same, exactly the same spot. Netflix. Shift already happened. Okay, but it hasn't really had a substantial move. It's been pretty resilient from dropping a whole of a lot. Okay. Nvidia. Like I said before, price shift happened over there. Where else can we point out? SPX. Price shift happened February 10th. Now, compared to the other stuff, the Dow's just been going sideways, right? I mean, nothing really exciting happening here over the last, I want to say 3 months. It's just been up and down like 4 points. It's really not moving a whole lot, which is kind of surprising. It's much more stable than NASDAQ stock. So it goes to show that the growth and tech sector, not so hot. The ones that are pretty stable right now are blue chips, and they are probably for the mid to long term the best play to have comparatively to anything on NASDAQ right now where it's super volatile. You know, especially when earnings are coming in, I would probably stick around on anything with dividends. Uh, you know, there's great resources that you can get a list. My top 10, I believe I mentioned them in the past before, but Zim, believe it or not, has really good dividends. Like you can see here, paid $2.95 on a basically on the price that was $22 a share. Like that's 10% per quarter. Right? Look at this dividend right here, 475 when the price was around 43, so 10%. So correct me if I'm wrong, but if it pays out that much per quarter and it's pretty stable, that's about a 40% dividend, right? Like that's pretty insane. So, I mean, I would love someone to fact check me on this one. I'm just going based off the information I see here. Again, $17 for when the price was around what, 80, 77? Like guys, this is kind of a gold mine when it comes to dividend stocks. I would rather just hang on to this the entire duration of my life because 40% guaranteed per year is pretty nuts. So anyway, like again, fact check me on this one. I really want to make sure it is exactly what it shows, right? Because every single dividend payout, I mean, except for, you know, right here, that was, oh no, 5% per quarter. Unfortunate. But they've been doing very well. So, not to say I'm recommending it, but that's something I'm definitely adding to my portfolio. So like I mentioned a few weeks ago already, I'm liquid. I'm waiting for the drops. Okay, playing put options right now would probably be your best bet in the long term. But again, not giving you any advice, just saying what I would do. So yeah, that's kind of what I want to go over. If you have any particular stocks that you want me to jump in, please leave a comment and I'll definitely add it to my list for the following week. Okay? So stay safe out there guys with your trades. Don't over don't overstep. Follow a strategy. If you like, in the link below in the description, there's going to be in the description, there's going to be a link that dives into the dollar cost average strategy. It's pretty well known in the trading world, but it's a very safe way to play for beginners when it comes to trading stocks. I recommend you check it out. It's really going to help you ease your mind in the long term. Okay? Thanks again for tuning in, and I'll see you next week.